But the important thing to really start a conversation about a plan like this is you have an insurance product, insurance protection. Okay, so it is 200% of the face amount. Confusing. Later, I'll show you ways you can sell this, but no. Okay, and then the centenarian bonus is available only to this product where you can get 25% of your face amount starting at age 80 and then 85, 90, 95. So this is like a bonus for living long, a centenarian bonus. Okay? Now, this is the meat of this product talaga. The primary feature and reason why I would sell it. Okay? It's the lifetime guaranteed cash benefits. You enjoy regular guaranteed cash benefits throughout your lifetime, equal to 6% of the face amount yearly. Hold on, let me just change the settings on this fan. It's kind of loud. All right, so 6% of the face amount yearly, starting at the end of the sixth policy year up to age 100. I know it's kind of confusing because it's always percentages of face amount now, but later on we'll discuss how to sell it without confusing you and your client. Okay? Now, the next one is the living benefits. So, because it's a traditional product, you can access guaranteed cash values via a policy loan in case of an emergency. Later, I'll show you what that looks like. Okay? And of course, like we said kanina, it's participating. So you can earn non-guaranteed dividends. Depends nga if company is profitable, diba? Okay? Now, you can also, now this is a feature of most traditional products. We don't really discuss this now, but I wanted to highlight this because it's called the Living Benefit Rider, where you can advance a portion of your plan's face amount should you be terminally ill, diagnosed to be terminally ill with life expectancy of 12 months or less. You can forward already up to 6% of your face amount. So, for example, your face amount is 1 million, you can forward 600,000 to help you with costs, diba? Okay? So this is a feature now we don't really talk about, but maybe something you can bring up, no, with traditional products. It's not just life insurance. Even though you're still alive but you're terminally ill, you can actually get some benefits as well. Okay. Now, manageable payment options. This is what I said earlier. Limited pay lang siya. You choose a payment term of either 3, 5, 10, or 15 pay variants. It's guaranteed to be paid in those years. It will not ask you to pay any longer. All right. Now, you can also pay this, of course, annually, meaning one time every year, semi-annually, split into two, quarterly, 4 times, and monthly. However, when you break the premium from the whole premium, there will be a bit of interest lang, no? Because traditional plans, that's how they work. When you split it semi-annually, you pay about 6% more. All right. Okay, and then some supplementary benefits you can add riders. Now, riders are additional benefits that you can attach to your plan, like a hospital income benefit, critical illness, accidental death, total disability. You can add it to this plan. All right. Now, so the document that they gave me is not so nice, but anyway. So the general description of this product, no, so it's SunLife Secure Income. It's Philippine peso only. You cannot use dollar to buy this. It's a traditional whole life insurance with endowment benefits, and the issue ages important to see here. You can start offering this and ensuring 0 years old, 30-day-old babies can get this now, and it's really nice for them because lifetime income for a 0-year-old baby, that's a long time of receiving cash, diba? And then you can offer and have someone insured up to 70 and 65 for smokers. All right? Again, the policy term is up to age 100. Now, the face amount, the minimum face amount is 250,000. Earlier this week, I was talking to somebody about this product, and he said, "Wow, that sounds like an expensive product." And I said, "Actually, no, because 250,000 na face amount. Did you know that the premium for this is around 50 something thousand a year for this is a 10-year pay. It's only 56, 57,000 for 30-year-olds. So that's not expensive. That's very accessible for someone who's working and starting to work. About 50,000 a year is not a lot. Okay. And then the minimum for this is not important now. The important thing to remember lang talaga is minimum face amount to offer for Sun Life Secure Income is 250,000. It's really cheap, guys. All right. Next. We'll skip this. There is something I want to bring up here, not this. Again, no, so the anticipated endowment or the payouts is 6% of the face amount starting at the end of the sixth year, technically the seventh, up to age 100 of the insured. And the options for this payout are you can receive it in cash annually, or you can leave it in the policy to accumulate with interest. Because this year, our interest for or accumulation rate for dividends and payouts that are in the policy is 4.5%. Quite quite good interest rates pa rin, diba? Okay, and then again, centenarian bonus, 25% of face amount, starting at 80, 85, 90, and 95. You can get that every on those years. Okay. And yeah, so the important thing that you guys need to know is the commission rate. Okay, so kanina there was banding, diba? Band one, band two, and the difference really is just the amount of commission. Okay, it's about 5% more commission for face amounts minimum of 2 million and onward. So below that, it's 40% for 10 pay, um, 40% for 15 pay. If you pay 5 pay, it's 30%. So may differences ng konti, diba? But the important thing to remember here is band 1 and band 2, there's a difference also in the commission. So like here, 10%, 10 pay, 40% for band 1 policies issued with face amount up to 1,999,000. If it's above 2 million, it's 45%. Okay? And as you can see, second year may commission pa rin tayo on the premium, and the third year, fourth year, and the fifth year, and then the sixth and seventh year only applies to the 15 pay version. Okay, so it's decreasing now, and it'll stop after that. Okay, so this is something that you'll need to remember for SunLife Secure Income. So you can take a screenshot. Go ahead. Okay, so this is why the banding kanina was brought up. Okay, this is the only reason. There's no other reason except for our commission. All right. So are there questions so far before we dive in to a actual proposal? And then I'll show you some actual concepts and ways I've sold it and maybe ideas that you can give to your clients. Are there questions so far about what we've covered? Baka na-confuse kayo with some parts. We can go back to that. No worries. Right? If shy kayo, chat it. Put it in the chat. Type it in the chat. No questions? All right. We'll proceed and look at a proposal. And I'll show you a proposal for one that I've been selling a lot. No, because uh, like I said, kanina, it's really nice for kids. Because if a child today is 2, 3 years old and they will get payouts until age 100, imagine the amount of money that they receive over their lifetime guaranteed, diba? Okay. Excuse my, I don't know, I have a little cold, almost getting out of it. All right, so here is an example of SunLife Secure Income 10. I prefer 10. Of course, if your client wants a shorter pay, you can offer 5 and 3. But for me, the sweet spot is about mga 10. No, it's not so expensive, not heavy on the annual basis for a client. But of course, if your client is super liquid naman and he has a lot of money sitting there and he really wants to get into something like this, have him pay shorter. Diba? It'd be good for him. At least he doesn't have to worry about paying long. Okay? So as you can see, it checks a lot of the boxes for income continuation, retirement. Later, I'll show you an example for that. Education, because yes, you can actually use the money for college funding and savings for milestones. All right. So the example that I have here, or it's not in, there we go. The example that I have here is the insured is a 3-year-old child, and the mother, who is 34, she is the owner of this policy. Okay. The face amount is 1 million earlier, but it's 200% of face amount, meaning the actual insurance coverage of this policy is 2 million. Okay. And it's only 217,510 for 10 years. Guaranteed pay, it will not ask to pay longer. Here, nakalagay, 10 years guaranteed premium payment. Okay. Now, how much is the face amount? How much is the payout of this? Remember, it's 6% of 1 million. That's 60,000. Okay. So if we scroll down to the next parts here to the benefit illustration, this is where you'll see the illustration of how the policy will give its benefits in terms of payouts and dividends. Okay. And if you look here on the fourth column, accumulated endowment benefit, you can see here, and at the end of the sixth year, when the child turns 9, may starting payout na siya, di ba? And then every year it pays out. This illustration here is when you leave the payouts to accumulate. Okay, so 60,000 every year, and then it's accumulating at 4.5% every year pa. Okay, so this is that. Payouts na to. This is money given to you through the policy every year guaranteed. And imagine, guys, until age 100 of child, look at how much cash it's been giving all these years. But and you pay 10 years guaranteed lang. All right? So, 3-year-old child, he turns 18. Look at how much cash that they can get. 737,000 they can use for college funding, whatever. Okay, so this is the beauty of a plan like this. When you have cash coming in, it's up to you how you want to use it in the future. Anytime, if they need one for a project of some sort during college, they can get here. Business starter fund, when the child graduates, they can get here. Okay, so this is the payout of this plan. Every year it will give payout until age 100 of this child. Okay, so before we move on to the next parts now, I'll just explain what this benefit illustration is, because it might be confusing for people who see it for the first time. And of course, as the advisor, I want you to be able to answer clients' questions when it comes to this. Okay, so when you look at the first column on the left, attained age, normally when you create a proposal, this is duration. So year 1, 2, 3, 4, 5, 6, 7, 8 onwards. No, I usually, when I sell it to parents for their kids, I always show it in age. When you create a proposal, you can change it naman on the output. No, but I always make it into age. So this is sort of like ano lang, the period of time, no, but based on the child's age. All right, the second column is cumulative basic premiums paid. So this is the total premiums that this client has paid for this policy. It doesn't mean that it's increasing every year. It just means this is the total that you've paid for all those years. So as you can see, about year, this is the 10th year, the total payment that the client has paid is 2.1 million. Okay. Third column, guaranteed cash value. Now, this is unique only to the traditional plans, okay? A guaranteed cash value is the guaranteed value of your policy, whether markets are up or down. It will be guaranteed, projected into the future. And already, this is what you will be guaranteed in the future, no? So what is it for? Earlier, it said you can take a policy loan out of your guaranteed cash value, but of course, you have to return it with interest, okay? Now, the good thing about being able to do like a policy loan is if, for example, you're in your 70s and you're unable to loan from the bank, you can take a loan out of your guaranteed cash value. Okay. Now, the accumulated endowment benefit we already discussed. It's the payouts that if you leave it to accumulate. Okay. The next column we'll look at is illustrative cash dividends. Now, this is what your policy will receive if SunLife is profitable. It will give dividends. Now, these are the dividends. Of course, they're non-guaranteed. It will really depend talaga on company earnings. But thankfully, I've been looking at a few old policies. They've been having dividends, no? So because SunLife has been pretty profitable. Now, if you leave it here to accumulate the next column, it will look like this, accumulating at a rate of 4.5%. Okay. Next one, hope you're still with me. Total living benefit. Now, I call this total surrender benefit. Why? Because if the client wants to surrender the policy, sabi, ayoko na, Edsel, sorry, I just want my cash na lang, then you will look at total living benefit. This is the sum of your guaranteed cash value, because you can surrender your policy and get the guaranteed cash value, plus whatever accumulated payouts that you've left in the policy, plus whatever accumulated dividends that you left in the policy. So, for example, when the child is 25, sabi ng client, sorry, I really need the cash. Can I surrender the policy? I haven't touched anything. Sige, let's surrender your policy at age 25 of your child. I've put it all the way at the bottom so it's easier to see now. So 25, the total surrender value of the policy is 3.759 525, 3.7 million. Okay, so that is the total surrender value of this policy at that year. Okay. And the last column is total death benefit. Now, the insurance coverage of this is 2 million. So there's always minimum 2 million as death benefit. And as you can see, it's increasing because whatever is accumulated in payouts and dividends is added on to the death benefit of this policy. Okay, so whatever cash savings or whatever you have there will be given to the beneficiaries on death. So hindi siya nasasayang. Okay, any questions about this little table that we just went through? My niece's mom died when I was 8. Can I give this to my niece? Yes, just indicate reason for giving. Yeah, you definitely can, Sheila. Yeah. This is only theoretical. Can I give it to someone not related to me, like a less fortunate but deserving child from an orphanage? Pwede ba yun? You can, so there's a trick there, Sheila, no? You can declare them as your godchild, and it works, no? Underwriting will accept it. That's the workaround to a situation like this. Yeah. But yes, you can actually do this for your niece, family members who you're supporting, and you want to, be able to give benefits to. Yeah, you can definitely do this. Oh, right. Thanks, Ivan. Okay, so first concept of this policy that I'll give you guys, no? Think of it like you have a golden goose laying golden eggs, no? Every year. But of course, the golden goose has to grow up muna, 7 years old siya, and then it'll give golden eggs na for life. Okay? So you raise this golden goose, you give it, you fatten it up every year, but before you fully pay the costs for the golden goose, meron na siyang golden eggs for you for your lifetime. Diba? 6% of the face amount. Okay? Clear ba? Okay? Now, earlier I said, diba, confusing masyado yung face amount, 6% of face amount. Ako personally, I sell this with amounts of payout. No? So speaking as a client, we have this income generating plan now, and it's guaranteed for life. How much payout do you think you would like to give your kids? No? Would you like to give 100,000? 200,000? I always think in round numbers para easier to sell, diba? Oh, gusto ko 100,000 payout. Sige, let's see how much that is. And it'll come out to be about mga 400 something thousand. That's 120 payout, diba? 120,000 payout. So sell this not with face amount, sell this by amount of payout that they can get. Diba? Ask them, how much payout do you want to get or you want to give your child? Or how much income do you want to get while you're still alive for life? So that's how you present a product like this. No, do not sell it by face amount. Oh, if you have a 5 million face amount, you get 300,000 no, 300,000 payout. It's kind of confusing, diba? So sell it by payout amount. Okay, and of course if mahalan sila, then you could adjust downwards, diba? Okay, no questions so far? No questions. Okay. So, I love selling this to uh parents with young children or grandparents with grandchildren because nga, the amount of time that they're able to get the payouts, the guaranteed is amazing. Diba? Think of it, 90 years of payouts for one child. That's a lot. That's imagine mo para siyang ang pao. So ang pao is like what parents and grandparents give to their kids diba, during New Year's, during birthday. Imagine mo you're giving ang pao to your child for the rest of their life. Every year they receive ang pao from ama and angkong. Diba? Parang that's that's unheard of. I cannot think of any other asset that allows me to do that for my child. Sure. Business, maybe if I leave a business to my child, my grandchild, but then what if the business doesn't survive? What if the business closes down because of a pandemic or mismanagement? So this one allows me to give lifetime cash to my children, to my grandchildren, without having that risk of a business closing down or a business going sour, diba? This is really perfect talaga for kids and grandkids. Okay? Okay, sige. Let's look at a different proposal, something much more accessible and something that you can offer as retirement. Okay. So earlier, diba, I said the pinakamura or pinaka-accessible, don't say cheap pala guys, say accessible or cost-effective. Don't say cheap when you offer to clients, because it makes your product sound cheap, but it's not. I mean, yeah, it's cheap, but the features of this, it is not a cheap feature, diba? There's no other feature. There's no other product that can do the same. So don't use cheap when you offer to clients. Use accessible, more cost-effective. Okay, so earlier, I mentioned the pinaka minimum is 250,000, and I've made here an example for a 30-year-old male. It's only 56,595 for 10 years. That's less than 5,000 a month. Diba? If you were to break it down monthly, diba? Less than 5,000 a month. That's doable. That is so doable. Diba? Think about it. People buy Starbucks probably more than that on a monthly basis, diba? If you combine it, lalo na on November, December, imagine mo the amount of Starbucks that they spend on just to get that dumb planner, diba? So 5,000 a month, you create a plan for yourself that you can get cash for your lifetime. That is a better option rather than spending it on other things, diba? So for 250,000 face amount, the payout of this is 15,000, guys. 15,000 annual payouts starting at the end of the sixth year for life. For life. Okay? And meron din 500,000 insurance that goes to this person's beneficiaries in case he passes away. Diba? So I'm creating an income generating asset, like I said earlier, that I can pass on to my heirs tax free in case I pass away, because life insurance proceeds go to the next generation tax free. BIR doesn't have any hand in all of this, diba? Actually, even your payouts, the 6% of face amount, is already net. It is not taxable with any other tax that the BIR currently has, diba? I don't think it's taxable. It'll never be taxable. Okay? So this 15,000 payout that this person will get is tax-free pa. When he passes away, this 500,000 is tax-free also. Tax-free transfer of this asset to the next generation. Clear? Dami kong sinabi na, but I hope you picked up the important bits there. Okay, there's a bit more that I'm excited to show you and some other concepts that you can think about. Okay, so going back to our retirement illustration. Okay, so this person, he is 30 years old, buys a policy at 30, pays for 10 years. There is an option actually, guys, that you can really save the money for retirement. Because we're looking at it now, 15,000, 15,000. When he turns 60, he has 3.4 million. Pero magkano yan? Sorry, hindi pala 60. When he turns, here pala, when he turns 60, 668,000. But if I were to make this a retirement illustration where he wants to see, gusto ko at 60, I have income for the next 20 years. Because that's what most people look at naman, diba? They want to have income for the next 20 years. So you can actually create an illustration where you don't touch the payouts muna. No, leave the payouts to accumulate in the policy. But at 60, that is when I want to start getting. Okay. Now, I haven't done I didn't do a proposal like that, but I created an Excel sheet here to show you what it looks like now. Okay, so again, 56,000 lang siya nagbabayad for, oops, nope. Nagbabayad lang siya ng 56,595 for 10 years. No? So by the time, right when he is about to turn 40, bayad na yung policy, diba? And he wants to get at 60, magkano yung, oh my goodness, what happened to this? Hold on, let me just fix the zoom. Nagkagulo. There we go. So at 60, leaving all the payouts to accumulate in the policy, instead of getting 15,000, he can get 92,827 for 20 years, 60 until 80. Oh, diba? Isn't that nice retirement benefit by just setting aside 56,000 for 10 years? Now, what if that 56,000 he didn't stop? Meaning, he buys another policy when he's 40, and then he buys another policy again at 50. Diba? So three times siya bumili ng policy. I've created that now, no worries na. So look at this. 56,000. When he turns 40, he buys another policy. Konting dagdag lang, it's 57 now when he turns 40. It also has guaranteed payouts that you leave until 60, diba? And then at 50, bili siya ulit ng bagong policy. Konting dagdag lang, no? From when he was 40. This also creates another set of guaranteed payouts that he will leave until 60. How much do you think his cash is at 60? Diba? His retirement benefit is at 60. Now, don't mind muna the payouts here because I've split them, no? Kasi when you turn 50 kasi, it's too short to be able to get payouts na significant at 60. So I've scheduled them a little later, but his guaranteed payouts at 60 will allow him to get 146,000 every year for 10 years and then 220,000 for the next 10 years ulit. 20 years of cash benefit retirement for him when he turns 60 all the way to 80. And then guess what? Remember, this one pays lifetime. He gets 45,000 kasi tatlong 15,000 yan, diba? Combined. It's 45,000 until he's age 100. And then remember, there's a centenarian bonus. Starting at 80, it will give an additional 187,000. And then at 85 again, at 90 and 95. See how much cash this guy can get when he starts buying a SunLife Secure Income at 30 today. And he just continues it, no, as like a habit for himself in the future, diba? Ang ganda, diba? So I put it all here, but it's easier to see. The total money that he set aside all those years of 56,000 annually, 57,000 annually, it totals 1.7 million. His total retirement benefit, which is his money from age 60 to 80, sorry, 60 to 80 is 3.89 million. May centenary bonus pa that total 750,000. And then the total payouts after he's 80, kasi it continues, diba? Another 900,000. Tapos, we all forgot, it's an insurance coverage. May 1.5 million pa na insurance coverage that will go to his family. The minimum is 1.5. Whatever is accumulated goes to his family din, diba? In case he passes away. So he's creating a retirement benefit for himself that's guaranteed for his future. But at the same time, in case he passes away, the cash that he set aside goes to his family quietly, tax-free pa. Diba? That's a great way to show a retirement illustration to somebody in their 30s, even 20s right now, diba? People who start working, show them this, diba? Let them think ahead for their future. No? Put a plan like this in place for somebody diba, in their 20s. That'd be great. Imagine what the amount of money that they can get for their retirement, diba? Right? Question so far about this little retirement illustration that I showed you here. I hope you didn't get confused, no? These are three different plants now. The red, the green, and the blue. Questions, please, guys. Just type in the chat. Yes, who's that? Yes, Ivan, go ahead. Yes. Yes. Okay. So this is yes. So tama ka, Ivan, this is accumulated of the three policies because each of the policy will give 500,000 death benefit. Hmm. So you're accumulating all three. Yeah. 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 Mm. Ah, okay. Okay. So yeah, so this little Excel sheet that I have here took a bit of work because I combined three proposals together. So you don't have to go in this level of ano na. But of course, if you want to, you need to show your client as a ano. Pero actually, the proposal itself, like for example, I'll show you this one now. The proposal itself, this one, already automatic na siya. So what you'll have to do lang naman is just type their name, their birth date, and then either face amount or premium, and then it'll just do it automatically for you na when you make a proposal. Yeah, no probs. But yeah, so it's just if you want to go really deep like this, sometimes you say parang when I'm bored, like, yeah, let's try it, let's see what it looks like if I do this, no? And then I do this, and then yeah, it gets too much. Ah. Mm. Mm. Yeah. Yeah, 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 yeah. Exactly. Mm. Yeah. Correct, correct. Yeah. That's right. That's right. Yeah. Yeah. All right. Sorry, going back lang to this ano, total insurance coverage. No, tama si Ivan. This is combined three. But remember, it's the minimum. This is the floor of what the family will get. Kasi whatever is accumulated by the policy in terms of his retirement benefit is added on to the death benefit. All right, guys? So it's added on. It will not stay in the policy and then Sun Life keeps it. Whatever is accumulated in the policy that did not get paid out to the client will be part of the death benefit. Okay. All right. So this is a retirement illustration. Earlier we showed it. I showed you an example for kids, diba? See how much cash that they can get over their lifetime, diba? And one thing about selling a product like this, no, I'll bring it back to this proposal now. One thing about selling a product like this, it for me, it already positions you to sell big cases. Why? Kasi nga, like I said earlier, sell it via the payouts. How much payout does your client want to get? Diba? If they want to get 1 million payout, how much is that? So you do the calculation, diba? And your commission is 40% of that. So that's for me how you sell big cases like this. Because it positions you to sell mo na based on payout. Do not sell it by premium. Let's say, oh, magkano ba yung budget mo, Mr. Client? Never do that. I always offer it as how much payout would you like to get? No, at the end of when your child is 10 years old, when your child is 6 years old, how much would you want to be able to give him now? So sell it like that. It positions you to sell big, not small accounts. Diba? Wag mo siya for me, don't please don't sell it na oh magkano yung budget mo. No. They'll just give you the change, diba? What's left behind. Offer it via the payout. Okay? And I'll show you an example of an actual case last year of selling big and why it also can really benefit a client. Okay? So I'll bring up this proposal now of a big case of last year. No? And this is not my personal case. This is somebody that I helped out lang. But using this, I showed the concept to a client of mine. My client got something also na bigger, diba? So I will tell you the story. And guys, you can use this story because I sell insurance kasi not by insurance. I sell it as concepts and stories of how it can help you. Okay, so this example here is So the mother of this, so the mom, siya yung owner and the person running things now, she recently is liquidating her shares in a business because her husband's passed away and the business is still connected to her in-laws. And she wants nothing to do with her in-laws now. So she's liquidating those shares and putting up a new business. Okay? So she's 4950. Now, she has a 20-year-old son, her only son. He's about to graduate from college. And obviously, because he's the only son, she wants that in the future, her son takes over, takes the reins of the business, use it as his livelihood in the future. Diba? Now, what she wants to do is that when she retires 20 years from now, 20 years from now, she's 70, diba? What she wants to do when she retires is that she slowly lets go of the business. Her son is now slowly also taking control about every single part of it. And obviously, she knows that her son will not be able to get the business 100%. There will be some adjustment period. There will be some adjustment pangs. There will be some inefficiencies because he's still learning the ropes of it. And she's aware of that. Okay. And which is why she wants to be able to give him, when he is taking over the business now, injections of capital just in case he needs it. To hunt for people to take over, to do the operations for him. She wants to be able to give injections of capital to her son when he is taking over the business. Okay, so that's the background of the story. This is the product, the solution that we showed her. Okay, so the solution is SunLife Secure Income 10. The face amount is 25 million. The insurance coverage of this is 50 million. Okay, the annual premium is 5.6%, 5.6 million. Now, the payout is 1.5 million every year, starting at the end of the sixth year. So when the son is 26, until the son is 100, he will receive 1.5 million for life. Wow. Oh my gosh. When the son is 100, he still receives 1.5 million. That's insane. Diba? That's a, think of that thought, guys. 1.5 million when he turns 26, all the way until he's 100, he will receive 1.5 million. Okay. Now, how does this help our client with her problem? Okay, so she said when she retires 20 years from now, she wants to be able to give injections of capital to her son. Now, if you let the 1.5 million payout sit accumulating in the policy, just like we did with that retirement illustration we showed earlier, diba? What does that look like for our client? So it looked like this. When the mother is retiring, her son is taking over the business, he can get 7.6 million every year for 10 years as capital for him just to help him with the business that is left with him. 7.6 million for 10 years. And then, remember, it's lifetime payout siya, diba? Continuous pa rin yung 1.5 until he's 100. So where did we get the 7.6 million every year for 10 years? That's all the payouts of 1.5 million accumulating plus the dividends accumulating. Leave it all and use it when the son is 20. In 20 years, 40. Diba? Now, a question may arise. What if the son doesn't need it? Diba? Let's say he runs it better than his mother. He doesn't need this cash. What can we do? What can the 7.6 million do then? Well, the mom is retiring. This can be her retirement play money for the next 10 years. Why? Because she's the owner of the policy. She has control of the policy muna. Diba? So if her son doesn't need it, she can get it. Oh, diba? Ang ganda. Her son may need it. It's ready there. Her son doesn't need it. It's hers to use. Wow. Diba? Diba? All right. Total cash out is in 10 years is 56M for 50M coverage. Yes, Nina. So the actual insurance coverage here is 50. But remember, which is why I said earlier, diba, sell this with the payouts in mind. Sell it with the payouts in mind. 1.5 million for life sounds like a really good deal. Diba? And then because of that problem that she's had, this 7.6 million for the next 10 years, diba? So this is what the story that I'm showing you now. Okay. Now, let's say they were able to get this now, no, this 7.6 million for 10 years. And then, so the mother has passed away. The son is now the owner of this policy. Siya na may control of 1.5 million, diba? He passes away at 60. And then obviously it's the next generation na. So the grandchildren na of the original mom, diba? They will receive 50 million in terms of death benefit plus whatever is accumulated pa in the policy. Diba? So it's three generations that was able to benefit from one policy that a mom started, 10-year pay lang. The mom who wanted to create something that will give her son capital in case he needs it. And then her grandchildren will also benefit via the death benefit from this policy that she bought for her son. That's three generations of benefits, diba? All from one policy that you pay 10 years. Amazing, diba? This little policy here. Okay? So you can use this story when you talk to clients. I think it's a good application of how this product can help someone. Okay? Okay. Now I had a question about this illustration then. And so, when you look at the money naman, parang the return is not that high, diba? 6% annually, parang I can get better than that. And I tell clients, of course you can get better than that. You're a businessman. You putting in your business, for sure it'll grow more than that, diba? I'm sure you'll double it in a few years, diba? It's you as the businessman, you're good at your business. You do your own business, I'm sure it does well. This product will not be able to get the same returns that your business can get. Okay, but here is what I always go back to when I offer a product like this. What we are offering you is something that your business cannot offer, and that's risk-free money. Diba? Think about it. Putting in a business, any business you think of right now, any business, guys, there's always risk. Risk that the business closes down because of external factors, risk that the business closes down because of internal factors. I was talking to a businessman the other day, and he said, um, they've had some internal problems because employees of theirs apparently behind their backs has been setting up a similar business stealing their clients. Oh, diba? That's not in your control, diba? That's internal factors na hindi control mo. There's a risk to the business, diba? So what I'm offering here is something that your business cannot offer. Risk-free cash that you will get guaranteed, diba? And I'm not asking for all your money. I'm just asking for a portion of it, diba? Whatever extra you have, put it somewhere here where it can generate guaranteed cash for the future, diba? Again, we're not gonna match your returns, but we're gonna give you returns that your business cannot offer, guarantees, diba? They say, diba, when you put up a Jollibee franchise, how much does it cost now? 50, 60 million, diba? To put up one franchise, you're set for life. That's what they say, diba? But the Jollibee beside our old office, BTTC, diba, right across, there's a Jollibee there. It closed during the pandemic. And that's Jollibee, guys, in the middle of San Juan, Metro Manila, like Sarado. So see what I'm saying, diba? We have to let our clients see what our product can do for them. Not what the product is, diba? Oh, it's lifetime payouts. Sure, yeah. But my business grows better than that. Diba? Yes, your business will definitely return better than this. But what I'm offering you is risk-free cash that you get for the lifetime. And then you pass on to the next generation. So frame it like that, no? Never offer it like investment, returns higher than whatever. Do not offer it like that. Offer it as what it can do for the client, diba? Guaranteed cash that they can pass on, risk-free, tax-free pa. Okay? All right. Questions about the illustration here? So again, guys, I use this story. I think this story can be relatable to a lot of people. Diba? This story that I told about the 50-year-old mom preparing for her retirement and her exit from the company. Diba? Questions? You can type it in if you're shy. Don't be shy. Or kung sira yung microphone na. Yes. Yes. So we don't. Yeah. So this for me would be the closest to an annuity. Because about an annuity is, let me get the exact definition of an annuity so we don't get it wrong though. So an annuity is a long-term contract with an insurance company designed to provide guaranteed regular income in retirement, often in exchange for a lump sum or a series of payments. So we don't have an annuity kasi on paper. No, wala tayong structured annuity product talaga. So I think this is the closest to an annuity that we can get. Yeah. So it's similar to an annuity where it gives that guaranteed cash. But the insurance side of this is what is not available on most annuities, I believe. So annuities just really just set cash lang talaga eh. Yeah. Mm, mm, mm. Okay. Can I share a story? Okay, so this is an actual story from our branch then. So this one, siya naman this person, hindi siya business person, but she's a professional. But she was in her age, mga 60s na. And it also helps tie in with Sheila's question earlier. Now, this person has a big account with a bank, local bank, and you know how banks have been so strict now with moving your money around, withdrawals, all that, diba? They become very strict. Ang daming requirements now. And in siya one time because she wanted to move some money around, place it somewhere else, and the bank was, delaying it. Tapos they were making it inconvenient for her para hindi ilabas pera, diba? So nainis siya. She's like, you know what? Ayoko na dito. I want to place it somewhere else, diba? Wait, tagalin ko muna itong screen para ano. Nainis siya. Like, tanggalin ko muna to. Tapos, buti na lang, itong advisor in our branch offered her some nice secure income. So sabi ng advisor, move na lang your money here. Sorry, I forgot an important side to the story pala. So this professional, I forgot kung doctor ba siya or something. She is single, no family, and she's helping support a nephew who's now parang college ata. And she wants to help support him, diba? Because she feels na she's like a parent na a mom to him. So, yung account that she has with that bank is actually a joint account with her nephew. Diba? Okay. So what she did was nilabas niya, diba? Tapos itong advisor natin, magaling talaga. She said, you know what? Ilagay na lang natin in a SunLife Secure Income, diba? This joint account of yours, anyway, you're thinking of moving it, passing it on to your nephew naman, ilagay na lang natin here, diba? Siya yung insured, ikaw yung owner. What's in it for you? While you're alive, may payouts ka for life, diba? While you're alive. And then, when you're no longer here, automatically, mapunta yan sa nephew mo, siya naman maka-receive ng payouts for life. Eh, itong client sabi niya, you know what? That sounds like a better deal for me rather than sit in the bank and I have to get all these forms to sign pa before I can get my money. Diba? So last year, or was it the other year? Yan, ang laki ng account. All because nilipat lang from the bank into Sun Life Secure Income. So what's in it for the client? Guaranteed lifetime payouts while she's alive. She gets money while she's alive. And then beautiful because when she's gone, this cash asset, transfers to her nephew tax-free. Diba? If left with a bank, may slap of 6% ano pa yan, estate tax, diba? This one, wala na. Smoothly goes to the next generation. So I hope that answers some questions also, Ivan. Maybe you can think of it that way, diba? Mm. Okay, so this one, once you purchase it, you're unable to raise the premium to get more payouts. Now you have to buy a new policy. Yeah. You can reduce the face amount if, for example, may financial constraints and you really want to continue the policy. Instead of lapsing the policy, you can reduce the face amount. That's the only option in terms of like changing the amount. Yeah. Mm-mm. Mm-mm. Yeah. Yeah. You can do that. All right. So our time's about to end, but I'll leave you with some ideas lang. Some things that you can mention to your clients this week instead of mentioning Sun Life Secure Income, guaranteed payouts for life. You throw some simple ideas to your clients, diba? Because I love selling concepts or stories, diba? So the first one is low risk income generating asset. We've touched on that. It does not have to worry about stock market returns. This one, it's guaranteed na. It's income generating for your life. And this asset, tax-free transfer pa to the next generation. So this is something that you can bring up about low risk income generating asset. Because sorry, for the real estate brokers here. No, I don't mean to attack, but I there's this my generation. I don't know, and my generation and the earlier generation, they had this idea of buying condos as investment. Yes, it does do that, but like what we're seeing now with the market in the condo market, there's so much supply. Costs are so high to acquire a condo now, and the return is not that high. I was talking to somebody earlier. I asked her, "What kind of being on your rental yield now on an average basis?" She was saying, "Well, on average, 4 to 5%. 4 to 5% for a condo that sits there in case wala kang rentals pa, patay, di ba? And then think about it, may a milyar ka pa every year. Kung wala kang rentals, patay. And then, passing on the next generation, tax pa, estate tax, di ba? There's so many little headaches for that people don't really seem to foresee now when they are getting into something. Now, think of Sun Life Secure Income. Think of it like a condo, di ba? You pay 10 years, parang installment, buy a condo. May pre-selling period muna, 6 years kasi nag-build pa yung condo. But at the sixth year, by income ka na, di ba? Na, you don't have to think about renovations, di ba? Because if your tenant is not really doing well with your unit, you have to renovate and repair. That's something to think about. A milyar every year. You don't have to worry about finding tenants. This thing will give 6% guaranteed, di ba? So maybe you can reframe it if it's a person maybe is used to the idea of condos, maybe you can offer this, diba? And then tax-free transfer pa to the next gen in case namatay siya. Diba? So that's my idea lang. Low risk income generating asset. Okay, next idea. Oh, sorry, there. So kasi nga it's guaranteed lifetime payouts, tax-free transfer of principal to heirs, no? So that's what we just discussed. Next, lifetime income floor. So what what does that mean? So lifetime income floor meaning they will receive an income lifetime na minimum is this. They will always receive this no matter what, guaranteed. That's guaranteed. This is the minimum that they will receive as lifetime income. Now, why is that important? Because it then allows our clients to take risk elsewhere. Diba? I think a lot of people these days are afraid to invest. Stock market has not been doing well. I mean, we've seen it the last 7 years. And people are afraid to put their money because they've seen the drops in the market about over the last 7 years. It's just been insane. And it hasn't been recovering. Diba? So people are afraid to invest their money. Now, if they have an income floor that's guaranteed and it's set there, at least they're more, at least a little bit more flexibility to take risks in somewhere else. Diba? Oh, sige nga, I have naman a guaranteed income here. Let's try putting it here. Maybe a higher return, a bit more risky, but at least I have this set. Diba? This is the floor that my income will be. Okay? So think this is another concept you can sell to your client, lifetime income floor. All right? And the next one, is this is a nice saying that you can talk about Sun Life Secure Income. Spend the yield, preserve the wealth. Think about that, guys. Spend the yield. You spend the payouts, but the principal is there. intact for the next generation. Spend the yield, preserve the wealth. Okay? See, these are some ideas you can talk to people this week. Okay, and I'll end with this. So investments, they offer promises. Oh, if you invest in this company, they will they're planning to put up this company, this building here, the mall there. It's all on promises, diba? But SunLife Secure Income offers certainty. And that's where we can really offer SunLife Secure Income. Diba? We don't offer promises on SunLife Secure Income. It's certainty. It's guaranteed that you will get it. All right, so I hope you learned something this week. If you have questions, still here, you can type it in the chat. If you have no more questions, some reminders lang, if in case you missed it, you weren't at the branch meeting last week, we have a local trip via our branch lang. It's a branch promo, guys. Reminder lang to, ha? It's only 300,000 AC. You get to go to Dumaguete na for free, August 46. Okay? Guys, until June pa to, so there's so much time to catch up. Okay? There's so much time to catch up. And what other reminders pa ba? Oh, and just in case, di pa kayo nakapunta sa new office, we're now in Green Hills, ha? Wag na kayo punta BTTC. Okay? Green Hills na the new office. Okay, so I hope you guys learned something today. Use the concepts that we had, that we discussed today with clients this week. Offer it that way, rather than offering it to the usual spiels mo, diba? Na? All right, so I'll send a copy of this document, the one that we just looked at, to the managers, and hopefully they'll be able to spread it out to you guys per units. Okie dokie, so that's it. That will be the discussion for this week. I'll see you next week. Bye, guys. You're welcome. Welcome, guys.